Thanks for checking out ChartGuys.com, the definitive home for technical analysis online. Our passion is understanding the market and identifying trade opportunities. Our goal is to share our success with others through consultation, training videos, and educational course materials. Get the skills that will make you a more confident, effective, and informed trader. Join us today for access to daily analysis and live market coverage, a thriving community of over 1,000 active members, and hours of exclusive educational content. Come for the education, stay for the community.
Hey everyone, checking back in. So big bear day out there yet again. So we've had red flags all over the place. Pretty much every scenario that I laid out yesterday saying if this doesn't happen, it's a red flag. We got all those red flags. Now is when we're getting extreme levels. I talked about in the previous videos how those bounces were not my ideal oversold bounces. That was not the trade coming to me. That's why I sat on my hands for the most part yesterday. It was just cooling off short-term RSI levels to allow for another leg down. And now we're getting to those extreme levels. And we're going to look at CGC leading the way here to the downside with some RSI levels as we approach daily oversold. But the bottom line is we're looking for a short-term solid bounce. And if you thought that the boat left without you over the last month, whether it's US MJ or Canadian MJ, the boat's coming back. This is all with very slim to no consolidation on the S&P 500, which again makes me cautious heading into the summer. What if SPY consolidates for 2 weeks in a row? The bulls would not be in a good position to absorb that weakness, although we don't have any sign of that weakness. Definitely want to be aware that all of this weakness in the MJ market, very little of it has to do with the sector as a whole. And really, it's just a cycle. We have the narrative about the summer slowdown that everybody's looking for. You know, the media will try and pick different reasons as to why. You're going to start seeing the bear articles. You know, the Canadian demand for marijuana is not as much as anticipated, numbers being slashed as far as expectations. So that narrative starts to spin along with the price going down to try and get the maximum bang for the buck in terms of market makers, pushing the price down before flushing everyone out and getting that solid bounce. But we have a bit of a different market environment now where we had very easy plays when we were playing into strength in this sector with a strong close at the high of the day. We looked for the gap up open, and it was automatic for weeks that would happen. Now we've been looking at oversold bounce plays with gap down opens, and here just looking back historically on CGC, it was while it was within the tightening equilibrium pattern, but we had multiple either gap down or lower openings that indicated the start of the bounce. So we're looking for that tomorrow. And it's a potential setup because we got a small bounce at the end of the day in most individual names. And that gives the potential that we have the same setup as yesterday where we bottom fish and look for the bulls to hold the lows of today first thing tomorrow and then look for that bounce to get going. So we're looking at still CGC as my guide as the sector leader. And it's not tick for tick joined at the hip as it used to be, but it's still very significantly correlated. And I've been looking for clues on CGC. I've taken some day trades based on CGC setups. So now when I see CGC daily RSI approaching oversold, I can look back historically and say, all right, the last few times we have kissed oversold has led to huge bounces. I'm not expecting a huge bounce, but I am expecting a bit of a bounce. The 4-hour RSI is oversold even with the end of the day bounce that we did see in CGC, and the hourly RSI was crushed today, but look at it bounce off of 20 2 days ago, and it bounced off of 20 yet again today. So there are short-term bounces on the way down, but we're looking for that real bounce where we see an hourly higher low and higher high, and we see significant follow-through. And we're wondering if that's going to be tomorrow. It all depends on what the sector does. At this point, I think the sector can disregard the S&P 500 in the short term as far as getting the bounce going. But it's the kind of thing where if tomorrow we're going to be the bounce day, if SPY bulls from the open, not opening 0.5% higher, but open and then go 0.5% higher, if we have that kind of bullish action, meaning we go up after the bell rings, that's a favorable environment for these bounces to take place. So perhaps without that, if we see weakness in SPY, maybe these bounces give us 3%. But if we see a day where the bell rings and SPY bulls control the day, that's the scenario where maybe we get 6%. So I think that what SPY does will determine the magnitude of a bounce if the bounce does indeed happen. And if we don't get some kind of a bounce tomorrow, I would certainly be very shocked with where the RSI levels do stand. And again, just looking at CGC 4-hour RSI, this is the most beat up that it's gotten since we got down to 25, and it got this beat up down in the mid 30s initially. But again, solid bounces from these levels in the past. let's talk broad perspective and then we'll get into the normal daily analysis. First things first, I have entered a few positions in anticipation of having a lot going on first thing in the morning tomorrow. Not only will I be live streaming, but knowing that there's going to be a lot of fast action in the first half hour of trading, I entered a position in CGC, in Cron, and in VFF today to try and limit the amount of activity that I have to do tomorrow morning. So if I'm looking for, let's say I was looking for a $100,000 position in Cron, maybe I enter $20,000 today and then look to find a spot where I'm comfortable entering that next $80,000 tomorrow. So I've started some positions in those names and all of them did close in the green, not very comfortably green, but enough where I'm fine holding it. And then again, I'm looking to add significantly more if we see these levels get to extremes. So broader perspective, CGC is in a monthly equilibrium. We had this daily equilibrium play out for months and it broke bearish. And I got to be honest, I was surprised at the lack of follow through initially on that bear break. And now we're getting it. So it just took a little while to play out. Look at the bear volume today, double the volume of yesterday, easily double that volume. And we're looking at the highest volume day in probably about 3+ weeks. So the weekly time frame is pulling back, and here's the equilibrium, but I like it for clarity condensed on the monthly time frame. It's a clear monthly equilibrium. If you are looking for long-term positions, you are welcoming this consolidation. You want to be buying into weakness. We have IAN, which we gave plenty of red flags on because it was being a big time bear the last couple days. It absolutely dumped today. And if you are looking long term on this fundamental story for IAN, you are welcoming this weakness because you want to be scaling in slowly into this weakness as opposed to buying into strength. So looking at CGC monthly time frame, if I'm looking at long-term positions in this sector, I'm going to be looking at CGC as my guide because when CGC gives us this monthly high or low, that's going to be a shift and a pivot point for the sector as a whole, in my opinion. So we were targeting the upper to mid 30s for this monthly high or low. And if it were to get pretty extreme, we could get down to the low 30s. I would be very surprised if we headed to a monthly lower high and lower low. It would require a lot of S&P 500 weakness for that to happen, in my opinion. The two scenarios are you enter on looking for the monthly high or low or scale in looking for the monthly high or low and then patiently wait for the monthly equilibrium to play out, anticipating a bull break because of the sector as a whole seeing strength, or you just wait for the monthly equilibrium to play out. We're going to form a high or low. You don't have to feel FOMO and feel like you got to enter at that point. You can wait, and this equilibrium is probably going to play out until Q3, Q4 of 2000, probably Q4 2019 or Q1 2020. But the bottom line is, for us to form a higher low and then probably a lower high, again, news changes things, but news in the overall S&P 500 can change things, but I would look to stay within this pattern for at least another 4 months, considering we haven't found our higher low yet. And even when we do, we're going to bounce and probably look for a lower high to then be set. So this is the chart that you want to frame and hang over your bed at night, because this is the most important chart in the sector, in my opinion. And if it does tighten up as we are anticipating it will, those will be good longer term entries, at least to see the higher low on the monthly play out. And again, just looking at IAN as a comparison on the US side of things, it is the same monthly equilibrium, and we're looking for a higher low compared to 450. And again, a nice solid setup of tightening ranges on longer term timeframes. And when these tightening ranges on monthly timeframes break, we anticipate months of follow through. So that's what I'm looking at, broader picture. As far as the short term goes, I am absolutely interested in CGC for a 4-hour and daily oversold bounce. Like I said, I already entered a partial position. I will look to add tomorrow if we see further weakness down in the low 39, 38. It all depends on what the RSI levels are. It all depends on how we open in the morning, which is why, establishing a game plan the night before is great, but that game plan can change based on what pre-market is doing. Pre-market is the most important information as in terms of tweaking the game plan of what to expect for the day. So I'm watching CGC, just to get it out of the way, CGC, Cron, VFF, and TLRY have my most attention heading into tomorrow. And I actually take that back. I'm going to IAN over TLRY. So we got our setup on CGC. We bounced at the end of the day, and that's people anticipating that, that could be shorts covering. If shorts are saying, wow, in the past we usually close weak and we see a gap down open and everybody buys that gap down open and I don't have a chance to cover my shorts and I have to compete with everybody buying at the ask to cover that position. Well, I'm going to learn and adjust to that, and I'm going to cover my shorts at the end of the day before I would anticipate the gap down to happen. So that's just the market smartening up, as it does on every setup that you see. It goes through cycles, and the gap up play will be back at some point. The gap down play will be back at some point, but perhaps shifting. There's been a couple times in the last month where I've expected a gap down and not gotten it, and that is the market smartening up. So for CGC, we got a couple resistance levels. If you want to look at resistance, you can see the hourly time frame doesn't really have much because we dumped all day. So I would look at the 15-minute time frame, and I can see that 40.29 and 40.55 are the first two resistance levels, and the bulls are going to try and pull off an inverse head and shoulders pattern on the 15-minute time frame first thing tomorrow morning. Bulls want to hold 39.66 and see bull buying out of the gate to convince those shorts to have to cover some positions and to see a lot of volume pushing the price up. So Cron is also extremely extended, not so much on the daily time frame, but the 4-hour chart just off a cliff, down towards oversold, and it was the hourly chart that was down at extremes. I looked at the 15-minute and the hourly chart, and I said, all right, I am comfortable starting to make entries into Cron, and I just lucked out that I decided to do so on this candlestick at 1674. But we're looking at resistance, and there's a lack of resistance here. I'm looking at 1704, and then up to 1767 is the next resistance level. So we have to see trend changes for prolonged bounces. We need to see the 15-minute trend change. We need to see the hourly trend change. And then from there, of course, the daily trend change would be great for bulls, but that's completely out of the picture at this point. We'll take it one time frame at a time, and we have to see the bounce on the 15-minute time frame start first. APHA held up a lot better daily inside bar after that very strong day yesterday. So we'll see how this inside bar breaks tomorrow. Just a tightening range where we had, and that's actually pre-market. So take off extended hours to see the clarity of the tightening range. Low, high of 1004, higher low of 965. Anything under 1004 tomorrow would be a lower high. If we could break 1004, 1009, 1014, 1017, that would be a massive bull break in the short term, heading towards earnings. But if we can't break 1004 tomorrow morning, hourly equilibrium is the setup. ACB, also a daily inside bar, broke the high of yesterday by only a penny. That's a double top and just a tightening range. So hourly time frame here as well, taking off extended hours. We've got the low, high of the bounce, higher low, and not much bounce following through yet. Anything under 914 tomorrow is just a lower high. I'm not interested in ACB or APHA in the near term because we're not in extreme RSI levels. I expect them to react to what the sector is doing, but I want to be playing the names that are the most beat up to just be looking for that quick few percent to the upside for the oversold bounce. And APHA with those earnings approaching, potential earnings play to be watching, but again, not the same setup for ACB and APHA as it is for CGC and Cron. Those two are in different pairings of their current setups. TLRY is definitely more in line with Cron and CGC. Inside bar tightened up for 2 days and broke bear, clearly broke bear. So I took some small losses in positions over this week as I was starting to recognize all these red flags. I took a small loss in TLRY after day trading it a little bit as well. I made some small wins in the day trades, but my initial entry, I did end up taking about $1 loss on that. Took a little bit of a loss in TILT from that weekly equilibrium that was shaping up. Took a little loss in KHRN, and that's just keeping me protective and allowing me to have capital to utilize on these pullbacks. So TLRY, daily RSI is approaching the teens. Again, we're in an area of a lack of support. We're looking down at the next support level of, it was 55s. Now we're looking down at 49.50 as the next support level. There's gaps all up in this area, and we are going to see a very nice oversold bounce at some point. But at this point, we've got daily lower highs every single day now for 9 days in a row. And the bears have complete control. I expect TLRY will bounce with the other names. And again, it's a little bit of a guessing game to determine which name is going to see the most percentage gains on the oversold bounces. Historically, we know VFF and Cron have been among the leaders recently of bounces in terms of percent gains. but that can change on any given day. So playing multiple names gives yourself more exposure to potentially getting those bigger bounces. And again, if you are not comfortable playing oversold bounces and you are new, the only thing I'd be looking to do at this point would be to slowly scale in longer term positions, looking months or years out if you're not comfortable with short term day trades type of flips. OGI, inside bar bear break, certainly a red flag. Lower highs every day now for the last 6 days. We still do not have a daily high or low established. We never changed that hourly trend. And we broke it by a penny, but again, double top. So no convincing trend change on the hourly and back down to a lower low. So it's all about 864 still for the bulls to hold that daily uptrend. But again, the 4-hour inverse head and shoulders will be possible as well. And actually, you could call that the right shoulder. It's a little bit small compared to the left shoulder. So I personally wouldn't say that's the inverse head and shoulders breaking bearish. Let's see if we can get a better time frame. I would be watching the 6-hour just because it's a little bit more condensed. And you can see that if we do hold 864 and we do get a bounce going, we can still very easily set the lower high and then roll over. So the bulls do have to be cautious of that, even if we do hold 864 initially on this bounce. TRST has been giving us red flags for weeks. Big bear spike as we drop down to lower lows. Inside bar bear break. 932 was support. We broke that as well. It's now 9 psychological and 855 as the next two support levels as the bears have complete control. The hourly time frames. If there's not a resistance level clear, there is here at 956. But again, look to the 15-minute time frame for more details to find these resistance levels from today's action. And again, big volume. You'll see this on Cron. You'll see it on other names. In my opinion, that's shorts doing the smart thing and covering now as opposed to competing with all the bulls that are going to try and buy a gap down open. HEXO, this is one that had a little bit of a fake out just in the sense that we opened higher above the inside bar and then dropped down bearish. But again, when you're seeing the whole sector do something and your individual name is not doing it yet, that's a bit of a heads up that your individual name is probably going to be a laggard and probably going to follow along. So for Hexo, the only support nearby is 815 and then 8 psychological. Again, looking at RSI levels to determine who's the most beat up. Look at the hourly, look at the 4-hour, look at the daily, compare all these individual names, and then find the resistance levels that the bulls are going to have to break to try and convince us that the bounce is for real, because yesterday's bounce was not for real. It was good for short-term gains, absolutely, but in terms of looking for follow-through, we didn't have it. So we have to be skeptical of every bounce because we're looking counter-trend. The trend on the majority of these names, on the 4-hour and hourly, clearly downtrends. A lot of these names are now downtrends on the daily chart, like Hexo, once it broke this equilibrium bearish. So again, we have to be skeptical of bulls. Don't give them any benefit of the doubt. They have to prove to us with volume and follow-through that their bounces are for real. Otherwise, we're going to exit break even, or we're going to cut losses very small, or we're going to lock in short-term profit and not try and see the bounce play out significantly. VFF is a tightening daily range still no bounce. And it's 1676. We held that support today by about 19 cents. We're not as extreme. The 4-hour RSI is getting down to oversold, but not as beat up as some other names. Hourly right there is oversold as well. I believe VFF will bounce with the sector when the sector does bounce, and we'll just be looking for VFF to set a daily lower high under $20, I would assume, especially with the amount of weakness we've seen over the last couple of days. So at this point, I would favor a bear break from this pattern. You know, whether it happens tomorrow or not, even if we hold it, because we have gotten in an equilibrium, you want to see the bulls form a higher low. Ideally, the bulls would have wanted to hold 18 here and then follow through to keep us in the tightening range. Whereas now, it's almost a descending triangle where we have a horizontal base of support. Pretty much the bottom line is the bulls didn't form a daily higher low soon enough to keep them favorable in this pattern. The favor has shifted to the bears that is going to have us looking for weekly consolidation to continue to play out if we break 1676. But similar to OGI, even if we hold this level and bounce, we are just looking for a lower high, and we could very easily see a lower high and then break our support levels. So the bulls aren't going to be out of the woods anytime soon on VFF in terms of being very comfortable. T-God's a potential daily bear flag. One of the strongest bounces yesterday, tiny bit of follow through first thing, gave it all right back. The red flag here is when you break to see the follow through and then drop right down and see a new low of the day. Instant red flag. So the only supports nearby are 404, 402, and 4 psychological. And if we lose those levels, we're looking down at 385. And it's just another daily lower high being set at 447. CVSI gave back all of that bull move on the news. Closed weak. Only support nearby is 532. Bulls are hoping that they can form a higher low compared to that level. And it looks like we have some after hours action. That doesn't look significant due to the lack of volume behind it. But we pretty much, I'd be watching it. Maybe the 4 hour is more clear. Double top at 598 and 599. Have to hold 532 and then break $6 to change this trend. Inverse head and shoulders on the 4 hour is a possibility, but only if we come out and break $6 tomorrow, which is a pretty tall order for the bulls to fill. And again, looks like that's just all 1 5-minute candlestick, and that also could just be shares settling from earlier in the day. Checking the bid and the ask after hours, and that's a fluke. We closed, and the bid and the ask right now is at 550. So weak close, 532 support. IAN is in free fall. Look at that volume today. The bear volume stood out 2 days ago. The weak close stood out yesterday. And today we just dumped. We lost weekly support. It's the monthly equilibrium, just like CGC is currently forming. And we are looking at daily oversold RSI as we're right down at 30. The 4 hour RSI is oversold. The hourly RSI is oversold. So I am looking at IAN tomorrow. And again, if you're looking long-term on IAN, I would much rather be buying long-term positions in daily oversold conditions as opposed to, moves that have run 20+% in the last couple weeks. So on any bounce, IAN resistance is 638. We need an hourly trend change. We have not seen a bullish hourly trend change on IAN in a week plus. So that is step number 1. If we change the hourly trend, we zoom out to the daily, and then we're just going to look for a daily lower high to form. But I am interested in IAN because it's one of the most beat up names, and it's a good, solid, fundamental company. So definitely keeping an eye on IAN. Like I said, I've already narrowed it down to 4 names, so I'm not overwhelmed tomorrow morning. And I've already established partial positions to help me stay from being overwhelmed tomorrow morning as well. CURA is a potential daily bear flag. Gap up open, instantly into selling. Support is down at 1190 and 1182. If those levels break, it's 1107. And the hourly time frame never changed the trend. It was a straight bounce off the lows. We never had an hourly higher low and higher high, and we gave back the vast majority of that move. CWeb also had a slightly higher open, but instant profit taking. Close at the low of the day. Support is 2472 from here. Hourly RSI is just getting oversold. Again, I do anticipate the entirety of the US and Canadian sectors to bounce at the same time, whether it's tomorrow or not. Can't say, but I think it's more likely than not we'll at least get a short-term bounce tomorrow. TRUL, not surprising for profit taking. You see a gap up open in this market environment, knowing that GTII just had a bullish reaction yesterday that sold off and closed at the low of the day and gave us red flags. You want to be taking profit on that gap up open. We gave it all back. We closed weak, and we now have a bit of an awkward setup because of that gap up open. But support is 1820, 18, and then 1740 from here, as weekly consolidation does look to be underway due to the inability to break resistance and then dropping down and breaking some support. GTII. So we got the red flag yesterday with the lack of bull follow through from the initial reaction to earnings. Close at the low of the day. Close at the low of the day. We're looking down at 1825, 1775, and weekly consolidation very clearly underway. Look at the monthly time frame. This is just standing out to me right now. It looks like an equilibrium. High, low. Looks like our monthly lower high is set, and we'll need a higher low to form somewhere above 1008. OH hold up better because the bounce was stronger yesterday, so it's holding up better today, but it's still not giving a whole bunch of confidence to these bulls. They want to hold 1131. Again, no hourly trend change happened. It was just a straight bounce from the lows. So holding 1131 as a start. We have to break 1238 to change this hourly trend. And if we can't, we potentially have an hourly equilibrium to be watching into tomorrow. CL, same thing. Higher open, instant profit taking. 1467 and 1409 are supports. And bears are in control. They're ruining the daily uptrends from being clean, clear setups with the weakness that we're seeing here. And again, it's just a whole bunch of fear in the sector. And it does look like that the narrative for summer slowdown is trying to be spun. KSHB had the bearish reaction where they pretty much said, hey, earnings losses are going to be double. That was all the bad news getting priced in. Market held the low of the day by a penny this morning, and that's one of the strongest days you're going to see today in the MJ space, and closed strong, anticipating that a lot of that bad news already got priced in. So, bottom line is establish a game plan. Are you looking long term? Are you looking for a day trade and a quick flip? Are you going to sit on your hands and practice because you're new to this environment and it's all going fast and it's confusing? Are you going to, I don't know what other scenarios there could be. Just have a game plan and write it down so it's right in front of you and you can look to it and stick to it, as opposed to letting your emotions change your game plan in the middle of the day. So I know my game plan is that if we see further weakness and we drop down and break to lower lows, I'm going to be looking to scale in to positions, looking for longer term bounces playing out, specifically CGC's daily oversold bounce. If we hold the low of today, first thing tomorrow morning, I will make entries, but less aggressively, because my aggressiveness matches the bears when I'm playing bounces. So if the bears are unable to break the lows of today and we start a bounce, I will add some more, but I'll be thinking a bit shorter term on these bounce plays and ensuring that I'm able to lock in some profit. Don't forget the power of scaling out. If I enter 10,000 shares of whatever company and we instantly bounce and we're up 2% in 30 minutes, take some off, lock in that profit, and that drops your break-even point significantly, and it makes you a lot more comfortable in that trade. So, if you're long and just sitting through all of this, this is a scenario where hedging would have been a good idea. But again, just learning for next time. That's all we can do. When we're new to things, just learn for next time. And the bear break of CGC, if you have a long-term CGC position, that bear break on the daily chart would have been a great indication to grab some long-term puts. And if you're looking bearish in the sector right now, you want to wait for some bounce to play out, but bears are absolutely going to be scouting for entries on lower highs being set on these bounces. So if CGC gets a bounce over the next few days, and we can even bounce 8%, bears are going to be looking for a lower high compared to 44.17. It's going to be interesting with these companies like Constellations and Kronos's partner, or Kronos's big boy is slipping my mind at this point. But to see, if they go in the red, want to double check and see where their entries are and where their cost basis is for their giant positions. But interesting to see what happens if we get this weakness. And again, the bottom line for all of this, S&P 500 is not contributing at all to this weakness aside from a tiny bit. So it's going to get interesting this summer, and we'll see if these oversold bounces are good entry opportunities longer term as they have been in the past. Keep an eye on those monthly long-term tightening patterns. I appreciate you watching. We'll see you over the weekend. We'll cover more tickers then, as we'll have 2 videos. So still in Pavones, Costa Rica, there's Baloo and Cowboy resting during the day, getting ready for their evening walk on the beach. Plant life, I don't even know what that is, but the plants and animals, again, were my favorite part. Just so many new things and new species of things that I recognize but are completely different in this environment. And that is where we lived for a month. So the beach was this way, probably about 100 feet just across a dirt road. And the yard had papayas in it and mango trees, and the monkeys would cross every morning. It was part of their path wherever they were heading for the day. And up here we had a little loft with a futon for hanging out, and down here is the kitchen and a hammock, and there's a bedroom up there and a bedroom down there. So very simple, very small and exposed, but what more do you need? So there's the hanging out spot. And ended up one night we had a scorpion in my room, and it made its way into a crack before I could get to it. So I had to sleep knowing there was a scorpion about 6 feet away from my bed. Fortunately, he did not come back, although my buddy did get stung by a scorpion literally as he was picking up his bag to leave to get driven to the airport. Fortunately, not poisonous. The yard had a nice outdoor area for grilling and having fires. Plants everywhere. There's an action shot of cracking open a coconut. You can see the strain in my neck. Those things are hard to open. I was very surprised. But when you get them open, that's the reward. The day pretty much consisted of wake up, sell the gap up open in US penny stock MJ, collect your winnings, drink some rum out of a coconut, go swim in the ocean and play with the dogs, and do it all again the next day. Ride our bikes into town and get some food. There's the little monkeys, probably spider monkeys that were going through the yard, and then they had the big howler monkeys. These guys were intense. They would yell. You could hear them a long way away as they were claiming their territory. Clearly a male howler monkey. Some more plants. I believe that's a something of paradise plant. So many species. And I love jungle hikes. So much to see. There's Cowboy with his bola de luz. One of those light balls I was talking about that we played with the little boy at the hostel. And a pretty butterfly on a pretty rock. So we'll wrap up Pavones next video, and then we'll get into present time. I keep getting these messages. People think that this is now, when this was 5 years ago. And so I got a message from someone today saying they hope I get better with my earache. And I recovered 5 years ago, but thanks. Have a good day. Do good things. See you tomorrow.